Welcome back to the Dividend Diplomat YouTube channel, guys. You got Bert and Lanny, the best dividend investing channel here, bringing you stock after stock after stock. Yeah, there's the bobblehead, Bert. And guys, today's about a big bank taking big hits, taking big risks. Is it time for you to make a big position in this bank stock?
Hmm. Hmm.
Hmm.
Hmm.
Hmm.
Only there was a video that was going to talk about this. If only, Lanny.
If only that's when we come into play, Bert. Let's go.
Yes. So, but before we talk about this, before you find out, smash that subscribe button. Give this video a thumbs up. Help your boys reach 20,000 subscribers. We appreciate it. Thank you, everybody. Let's get to financial freedom together. And maybe it's going to be done buying this stock. Who are we talking about here today, Lanny?
And gosh dang it, actually, let's get to we're not
Oh,
going to ask for 400 likes. Let's get to 300 likes on
all right.
today's video. Thing
All
is,
right.
we're not going to give it all the way for we're not going to give 7 days. We're going to give 24 hours, 300 likes. We hit 300 likes, you guys comment and subscribe. We're sending some diplomat swag your way. We'll shoot you guys a message once you give us an email and we'll see what you guys want. But
Love
Bert,
it.
today is about one of the biggest banks here. We're not talking about JP Morgan. We're not talking about Wells Fargo. We're not talking about Citi. We're not talking about even Apple here because they could technically be called a bank with the cash savings program that they have. Just kidding, guys. And Bert, you own this stock. This stock is near and dear to your heart.
That's right.
You got some shares back when you were a young one here from your
Mhm.
grandma
That's right.
and
Bar mitzvah present from my
bar mitzvah
grandma.
present. Guys, we're talking about Bank of America. Ticker symbol is BAC, and they are still trading right now in the low 30s at $32.22. All the banks have been releasing those fourth quarter earnings releases last week, and you're going to get a ton more, or you've seen a ton more this week because this video is being filmed the night of January 21st and it's being released on Thursday, guys. So there's a lot of news right now within the banking space.
Yeah, and there are a few negative headwinds that are facing the banks right now. First one to cover is obviously the performance. As the economy continues to show some signs of cracking, banks are increasing their provision for loan losses, which helps increase the reserve to use to offset bad losses. So obviously, the more provision that you have, the more you have to reserve, the more potential loans that are going to go bad in a bank's portfolio. We've been seeing that across the sector, especially as delinquencies continue to rise, and Bank of America was no different. Their provision for credit losses increased $12 million to $1.1 billion for the quarter. And on top of that, you're seeing increase in credit card balances, you're seeing an increase in delinquencies, and you're seeing a lot of increase in those negative trends that are causing them to reserve more money and take a bigger loss in the quarter.
And thanks to Silicon Valley, Signature, and all the other banks during the banking crisis, the FDIC has put their assessment out to
Mm-hmm.
a slew of the largest banks out there. And Bank of America took one on the chin as well. $2.1 billion FDIC assessment that they took in the quarter. They had the option to kind of stage it out, but they just said, let's just take it on the chin now. Let's just flush that fourth quarter. And you'll see a lot of other banks doing that. Um, you know, why spread out a hit when you could just take it all, have one bad quarter, and you could move this way? And
Yeah,
that's what
2023 has been a bad year for banks, so the expectations are already very low. You might as well take the hit in the year where the expectations are low to set up a much more successful 2024 where if you can.
take the hits, take the charge offs, take the provision, and then
Mm-hmm.
set yourself up for the future. Sounds a lot like the pandemic. Take all the provision you want and then flip it back right afterwards, guys. So
Yep.
that could be exactly what is happening in the banking industry, but we'll focus
Mm-hmm.
on Bank of America because
Yeah.
Bert, after all of this, the stock is down in 2024 in the few weeks, the 3 weeks that the market's been trading. They are down 5%. And we're always
Yep.
looking for not just a stock to talk about, but a stock to see if it's good for anybody's portfolio. And we'll have to see if Bank of America fits the bill here.
Yeah, that's right. So we're going to run them through our screener, which features three metrics and a bonus metric. Actually, this one's going to have two bonus metrics when we get to the valuation part of it. We look at the price to earnings ratio. We compare it to the S&P 500, but also for banks, that bonus metric, we're going to look at the price to book ratio because you look at that is the metric for the banking sector. So we have to highlight on that. Second metric is that payout ratio with the dividend payout ratio, where we look for the dividend divided by earnings per share. And we want that to be 60%. Third, history of increasing dividends, where we look at the 5-year average dividend growth rate and the number of years a company has increased its dividend. And last, that bonus metric, the dividend yield.
Bank of America. Bert, did you ever end up buying more shares of this stock?
Never did. Never bought more Bank of America. Just the original OG gift that I got from my grandma.
Guys, let's give up props to Bert's grandma. She was the best. There's some fun pictures of her at Bert's wedding as well in
Yeah.
that chair. So, guys, like this video. Let's get to 300. Drop a comment on your favorite bank stock. Remember, 300 likes, 24 hours. The deal is on. But Bert, Bank of America, so $32.22 right now.
Mm-hmm.
Looking at Yahoo is estimating still $3.15, which does kind of bode well, matches well with the year-to-date performance for Bank of America. So their PE is still about 10.
Yeah, so let's look at that price to book ratio. So you'll take the price 32.22 divided by that book value per share, which is 33.34. So that price to book ratio is 0.97. It's below the 1x that we're always looking for, which is great.
Yeah, good sign for undervaluation within the banking industry.
Yeah.
You just look at JP Morgan's and you'll see, compare that to theirs, and you'll see why Bank of America has a nice little bright spot there. But sliding into that dividend payout ratio, they pay a 24-cent per share per quarter dividend, so just under $1.96 for the year, a 30.5% payout ratio. We'll pause there because banks typically have below a 50% payout ratio, and you commonly will see below 40%.
Yeah. So it's a great call out there. So it's still, even with that in that sector, it's still very low at that 30%. Their 5-year dividend growth rate's 11.38%, and they've increased that dividend for 10 plus years. Banks have had an interesting dividend growth rate too, because a lot of them just paused it during the pandemic, just to make sure earnings and there to prevent previous crises, which was the prudent move. And then after that time, banks just jacked up that dividend. They made up for lost time. So you see a lot of strong dividend growth rates, and Bank of America is no different because, again, it's 11.38% on average over the last 5 years.
Exactly. I agree, Bert. Their yield is just at 3%. They're at 2.98%. You could really grab them, very cheaply during that, second quarter of 2023.
Yeah.
But they're still, fairly valued right now. Again, down 5% this year, down 6% versus this time last year. Their 5-year average dividend yield is 2.24, so you're getting about 74 basis points premium to the 5-year dividend yield average. Obviously, stock price is down, dividend has grown, so that obviously kind of works great in the favor of a dividend investor.
That's right. So let's summarize here. PE 10.23, price to book 0.97, payout ratio 30%. 5-year dividend growth rates nearly 11%. Increase that dividend for 10 years with a 3% dividend yield. Lanny, what are you thinking here about Bank of America?
It's funny. I don't own a large bank in my portfolio, not like outside of the Canadian banks, Canadian Imperial. I know you own Citi as well. If you were looking for a large bank to buy, I think Bank of America actually is doing very well. I do see them expanding, building branches here in Northeast Ohio,
Yes.
which is not a common area that the footprint that they're in. I know their credit card suite of products also has some very good reward programs with it.
Yeah.
Um, I'm not currently running to the stock market and hitting buy Jim Cramer style, but if you're looking for some banking exposure, Bank of America is looking like a very good stock to buy right now. But
Yeah, I agree. Yeah, I very much agree. It's in that spot where it's worth watching, worth monitoring, especially as bank earning season continues. And if there's a sudden pullback and you're looking for a safe way to enter the financial sector, Bank of America has to have your attention and it has to be one of the stocks that you consider.
not all stocks we talk in here are screaming buys. Not all stocks will we buy, but we may say, hey, if it, has a spot in a portfolio that's looking for a need in that industry, we might say, hey, it looks like it could be a good one. This one looks like it could be a good one.
Yeah.
Um, What do you guys think of Bank of America? What big bank stock do you own? Do you think this is a great stock to buy right now, heading after the dust settles from the earnings season here?
If you haven't already, subscribe to the channel. Give this video a thumbs up. Hmm. Anything else I need to tell these fools, Lanny?
Get Hulkster over here. You're either with us or you're against us, Jack. That was Bert the Hurt and Lanny from the DD over and out.